Let's go ahead and work on processing payroll. That's going to be our first payroll for this simulation. I know a lot of you've been requesting that we do simulation with payroll, so here it is. We've done a very detailed one this time, where we'll have time cards for each payroll run. We will not necessarily cover them in every single episode, and some we will process them off the record, and then when we go and record the video simulation, we will just run the payroll. But for the first few payrolls, we will process everything on video so that you see the entirety of it. Just one more note, we will be doing it in QuickBooks Desktop, and what we did, we turned on manual payroll. You have to do it in the settings. QuickBooks does a very good job assisting you with payroll for a fee. However, in this simulation, we're just going to do it manually, and then, of course, the one that they do for you, they'll charge you, but then again, it will be connected and they will assist you, which again would not differ much from accounting standpoint. Of course, the numbers would be different. Anyway, let's move on. DeCre Accountancy, as we mentioned, it's a CPA office that has, during the year, it will have a total of 6 employees. And what we have here is Lebohang and Reyes, their owners. They will be salaried, or is what it's called, exempt employees, and then the rest of the personnel will be hourly. Not all of them will start right away. They will join the organization throughout the year. However, we have them all preset here just, for ease. We kind of loaded them up ahead of time. So let's go ahead and work on our first payroll. We just basically opened up our payroll bank account. We will have 2 bank accounts in this simulation. In addition to general account, we will have payroll account, which is again typical for processing payroll. You want to keep those accounts typically separately, right? And so what we'll do is we'll do funds transfer for this one to create our payroll bank account, and it will be dated 1/15. Again, we are in 2021, and we will transfer the money from our bank account. There it is. And it will go to our payroll account. Okay. And the amount is 2,000. So again, let's go ahead and make sure that we understand our debits and credits behind this one. Again, both accounts are assets, right? So we know that much. And what happens here is that money will be leaving general account, be going to our payroll account, right? Again, since they're both assets, you can see that when we debit an asset, it goes up. So 10,200 right here, that's the payroll account, it will go up. And then 10,100, that's our general account, will be credited, it will be reduced by 2,000. So again, just transfer from one bank account to another. One asset goes up, the other asset goes down. Alright, we get a warning again. We'll have to reset it. Yes, it's 90 days. Alright. Next, we have time cards. We're going to start processing time cards. First, Lebohang is our first, our first time card. Enter time. Alright, so let's go ahead and start keying those in. Again, the owners are salaried, so it's pre-programmed. It shows up right here. And the other cool feature about QuickBooks is that you can have your time cards, like typically for accountants, in the fraction of the hour, and it will transfer it into minutes right here. Let's keep going. Again, this is a very cool feature because again, with timesheets, we actually enter information for both customer billing and payroll processing, and we will show it to you. However, at this time when we are entering these time cards, actually debits and credits are not affected. On large organizations or perhaps in different installations, you could make it so that it is affected because again, actually, we need to clear it up. One thing that we'd have to pay attention to is the date here, right? So let's go ahead and change the date because you see on the time card, the date is from January 4th to January 10th of 2001. We're doing this simulation in 2022, so we got to make sure we watch our date. So here it is. All right, so week of January 4th through 10th, right? So we'll be doing that. For so let's do it again. So what we do here, it's a sales and use tax activity, very typical thing for an accounting office to do, to assist clients with processing their information for sales and use tax returns or other activities. So again, in this case, we're tracking it by the type of activity we do and by client. And again, as we mentioned before, that QuickBooks transfers it into minutes for us. Oops, I'm gonna put 2 hours right here. Okay, now we're good. All right, yeah, it looks like we have a bunch of retailers here, all right, looking by their name, and we're assisting them with processing sales and use tax, and we're documenting that by writing time card. Again, like I mentioned, in this instance, time cards are not impacting our debits and credits. However, we want to do it just to show you the process. And in the future simulations, we'll just skip directly to running payroll, and we will have the time cards entered off the video. That's what we have, and then we have that's office. So not all activity obviously is billable. Some activity is basically your administrative overhead, right? We are setting up office, we need to hire new people. So there's all those things that, we can't bill our clients for it. So here it is. Anyway, we have our 40 hours, right? 40 hours. This portion is not billable, right? The week is correct. Again, it's not impacting our debits and credits, but let's do that. Just again, let's get through it on this payroll just so you see the processing aspects of it. Okay. Save it in. All right, that's the following week. So payroll here is bi-weekly, so we're entering time cards for 2 weeks. So where's our other? Just go ahead and go to the next week. This is payroll tax, right? Year end. So clients want assistance with year-end payroll closing, W-2s, 940s, you name it, right? And plus quarterly, so there's quite a bit of work, and that's what this billing is for. And again, even though the owners are salaried and it doesn't matter how many hours they work, they get a flat compensation. We still need the time card, right? Because we will build the clients based on it. So that's why, again, it's important to complete it. If you want to do it this way, of course, you could keep track of it in other ways and then generate and then enter the bills into QuickBooks, which again, we can demonstrate that in following episodes of this simulation. All right, let's keep going. Where were we? Okay. Okay. One extra there. The clients are different in size, nature, so it takes different amounts of time to complete it. And again, depending on number of employees, and therefore we can see different amounts of time spent. And let's see where we're at. There 12. All right. And one. Here it is. We have 57.5 hours, 57.5 hours. So that's correct. The pay period right here, January 11th to 17th. Yep, that looks correct. So we're good to go to enter this time card. Next one. Next one. He is for Reyes Kelly. That's the other owner. Yeah. Okay. So again, let's go ahead and enter their time card. This is sales and use tax. So this accountant assisting with sales and use tax, which is again very typical, right? It's the turn of the quarter, turn of the year, so people need assistance with that. All right, there's a billable activity. Um, 7. Let's see, 2 hours right here. Last one is our office, right? That's administrative. So again, you might ask, why are we covering this? There's no debits and credits. It's just to demonstrate that this is how you can use QuickBooks to generate payroll and to generate customer billing, which we will cover. Payroll we will cover in this video and in all the future videos, and then customer billing we will cover in the February, right? Because this is what we're entering, so you'll see that the information that we entered now will be used when we bill customers in February. So stay tuned. That episode is coming up. Anyway, 40 hours. Here it is. The time frame is correct. All right, saving you. So let's go back, and if anything, you can take a look on how fun it is to enter time using QuickBooks. So we have this. Let's go to the following week. Okay, here it is. Same activity. If anything, it's a good practice for a refresher on how to enter time cards. So that's Thursday. This employee. So this is how you enter time cards in Quick. Not something that I typically would do, but for dear audience, we'll do that. But, yeah, you guys been patient and waiting for those payroll videos, so gotta do it. Gotta do it. Anyway, here it is. Let's just double check. Everything is good. Looks good. Looks good. Looks good. Looks good. Our hours. Yep. Okay. So let's go ahead and save a new. So that was for okay, I knew that I could have made a mistake here. So again, this is administrative activity. It's not billable. So let's uncheck that. Save and new. All right. And we have at this point one more employee, and that Chisomo. Chisomo is an hourly employee that does, essentially certain tasks and fills out the time card. So here it is, January 4th. Let's go ahead and do that. So for this person, the time card will drive two things, right? It will drive their compensation and it will drive the billing to the client. All right, so this particular person does bookkeeping, all right, and they're hourly. Okay. Oh, okay. So made a little bit of a mistake. So the way they filled out time card is slightly different. That's okay. So the 14 was billed on Wednesday. We can steal it, right? I mean, everybody fills out time cards their way. Okay, and then we have this, which is fine, for our office. So administrative overhead, and, something. And in this case, it was 8 hours of administrative overhead. Again, it's a new employee, probably doing some kind of training. And what else do we have there? Thursday. Daycare. Here it is. It's 5 hours and then 3 hours here. Okay, all that. Bookkeeping, hourly. Okay, here it is. 5 hours and 3 hours for this client per time card. Awesome. And then it looks like we have the rest of the hours, the rest of the clients in there. We just need to add a couple more. Okay, here it is. Bookkeeping. So this client we have 2 hours, right? And one more client. 0023. Okay, here it is. 2 hours and 225. And then we have some more billing activities and some overhead. So again, overhead is right here. And that's 175, right? Friday. So I did some overhead work and then you did some work for bike connections. All right, so that's 2 hours right here. All right, and we're at 40 hours. That's correct. Again, the activity for office for us, that's not billable, right? It's administrative overhead, so we're going to unclick it. The rest looks good, right? We can cross-check it this way and this way, and then it's good. So again, let's save a new. And we have one more time card for Chisamo. Let's go ahead and fill it out. And again, if anything, you know, even though it doesn't affect debits and credits, it's if anything, we show you how to process a time card. It's a useful skill to have. Here we are. Let's see. Let's go. Bookkeeping and some activities. So let's start entering those. Day 7. So that's billable. This is for office. That's not billable. That's administrative overhead we have. Activity. Just unclick it right now. Bookkeeping. Yeah. This one is billable. That's great. And you'll see that it matters because we'll actually, again, then, after entering all this wonderful information, what happens is, let's set up, done. So this is 0. Keeping. Then we don't have to enter as much when we do billing. Again, at that point. Alright, so sorry for that diversion. Right here. Okay, so we have, see the same client right here, 891.011, 91011. However, it's a different code. So what else we do? We do payroll, which is typical, right? Here. Also did a following day. Some more bookkeeping, back to bookkeeping, right? What do accounting offices do quite often? They do bookkeeping and they process payroll. Different from, you know, handling payroll tax forms and all that, just regular payroll processing, typically very often done by accounting offices. What else do we have? Our clients. Again, those are our payroll, and they're both bookkeeping and payroll clients, it looks like. Or payroll activity. This one, payroll activity. And then we have one to add, 23, right? And we're doing payroll. Here it is. Let's double check. We have our 40 hours right here, and that's what we have on the time card. We can cross-reference this way. Yep, everything looks good. We unchecked the administrative overhead that is not going to be billable to our clients. So here we are, we're good. Saving you. Oh, we're done with time cards, so we can close out time cards and get to the fun part, right? Hopefully. Processing payroll reports, right? So let's go ahead and do that. So we have them kind of pre-calculated. This is what I call payroll report. But we will essentially process it in QuickBooks as well. And this is something that would be, essentially generated. But our payroll date is right here, so let's go ahead and pay out. All right, but we could enter essential information from payroll reports directly using, general journal entries, and we can show it to you. But the only downside is if you enter it that way, you will not be necessarily able to use it in processing forms at the end of the year. So that's why in live accounting it's better to do it and enter it through payroll module in QuickBooks, even if you're using it manually. Anyway, let's go ahead and do that. So here we are, employees, pay employees. All right, let's go pay employees. Here it is, right? The 3 employees are actually showing up. So let's make sure, first of all, everything is correct. So our pay period ends on 17th, so let's make that adjustment. And then our check date, yes, and then our check date is going to be in 21, right? Because again, even though we're filming it today, the simulation takes place in 21. Right, which is typical, right? Our payroll period ended on 17th, and we typically would pay right by the Friday of that week. It takes us time to enter information. So we did enter the time cards, you just saw that. Our check date is 22nd. Our bank account is payroll account. Make sure that's changed. We have balance right here of only 2,000, but you can see that we do have this payroll cash requirements, and we will fund the payroll to make sure that everything clears and all the tax payments and all the payroll checks clear. Anyway, let's keep going. So here we are. We have Chisomo, 80 hours, 97 hours, and 90 hours, which is again typical for owners to work more than your typical 40-hour weeks. But again, for hourly employees, if they work over 40 hours, they may have to be paid overtime. So in this instance, they don't have any overtime. They work 2 weeks, 80 hours. Each week was 40 hours, so all good. Anyway, let's keep going. Okay, let's go ahead and do the fun part of paying our employees. Okay, so here they are, they're selected. All right, so again, right here, you can see that their wages been calculated. We still need to make some adjustments. It's just, again, the way QuickBooks calculates salaries, wages, when you use hours for other purposes, is actually like prorates it to hourly and then adjusts it. So we'll have an opportunity to make that adjustment. So again, let's go ahead and we can't create paychecks just yet. Simply because, again, we don't have the taxes included, but let's go ahead and enter it, right? We have our payroll report right here. Typically, you would generate that report if you paid for subscription on QuickBooks payroll, or if you had somebody externally do it for you, like Paychex, for example, or ADP. In this case, basically we did our calculations in some other way, right? And then we're just going to enter it in QuickBooks Payroll so that we can track it in QuickBooks. So again, this is our overall payroll report. It will all start making sense, right, in quite a bit. And then these are our individual employees. So first we have Libohang. Let's look at Libohang right here. All right, so first our gross wages match. That's good. And then we have some employee and employer taxes. So let's take out employee taxes. All right, let's enter those. Okay, and you can see they're showing up as negatives because again, they are withholdings, right? They're withholdings because the employer holds them on behalf of the employee and then submits it to the government. So again, for 1,780 and 77, okay, it matches, excellent. Okay, let's take a look at the employer taxes for this employee. Here it is, and that's Labohang right here, employee one. Let's see, our training tax is $7. Social Security, $476.92. Medicare, 54. Federal unemployment, $378. And then state unemployment, $238. All right, here we are. We entered everything, save and next, our dates, everything matches, right? Okay, let's continue then. Next we have Reyes Kelly. All right here. Again, you see that the wage doesn't match. It's a little bit off by 3 cents, and that's simply because, again, you can see the way it does. It actually calculates and prorates the rate right here. It makes no sense, but it's not a big deal. What we do is we make this other payroll item and we make adjustment, right? So salary rounding, adjustments addition, and it's as simple as 3 pennies. And you can see now that the check amount gross right here, it doesn't show up here. I know there are limitations for every software, right? But it does show up right here. So we know we're starting with the right amount, $7,692.31. And that's what we have right on our payroll report right here. So let's go ahead and enter employee taxes so that we make sure that our net is correct, right? So again, let's go ahead and start with federal. 1,538.46. Social Security for $76.92. Medicare 54. 692.31, and disability 92.31. Now you might be asking, so let's take a look. Our net matches. That's what we were going for. Let's enter employer taxes right here. Let's start at the top. Employment training tax. Let's go back. Here it is for employee 2 for Kelly. $7. Social Security $476.92. Medicare $100.54. Federal unemployment $238. And state unemployment, no. Federal unemployment $378. $338. Okay. Here it is. We entered that. All right. Let's make sure we did that correctly. There it is. You'd be asking, well, where are debits and credits, right? When are we going to get to the fun part? We're getting there. We're getting there. As a matter of fact, at this point, before we click process and print checks, it is not going to impact anything. But once we do that, it will, and we'll show you. So again, which accounts are being impacted right here? Not yet, right? Not until we print checks. That's the event for this, but we can definitely take a look at what accounts are being impacted. So we know that payroll expense, and that's, you know, in many ways that's the way it is set up in QuickBooks. That's how it works. So payroll expense is 66,000. Right, so that's being impacted in two ways, right? First, that's our gross wages, right? So it's that plus 3 cents. So 7,692, 28. Just this so we don't make it, because we need the adjustment, right? Makes sense, right? What else? Employer taxes are also classified as payroll expense. Makes sense. That's your gross wages. And then the employee taxes right here, they're included in this amount because we're withholding them. But employer taxes, they're right here, right? They're the additional items. And they're the ones that are also expense, right? So it's 7 plus 476.92 plus 954 plus 378. Right? What else is there? Plus 338. Right? So that's part of the payroll expense, right? Just for that individual employee. Now we have 3 of them, so that's why. But what else is being impacted? Well, the way it will treat the check that we give to the employee, the net amount, the check amount, it will basically impact the payroll account. It will make that assumption right after we print the check. So that's going to be 478077. What else? Well, they'll have payroll liabilities, and it's going to register all these taxes that the employer owns, and then it withheld from the employee. It will classify it as payroll liabilities until they're settled, right? And so the question is, what account? Let me take a quick look. I'm looking at my cheat sheet. Just a second. Payroll liabilities, 24,000. So liabilities go up when credited, so basically the difference will go in there. So what it is, it's essentially all these, right, employer taxes plus all the amount of money that we withheld from the employee. So let's just do that on the example of this employee, just so you see it. And then we'll do it at the level of the entire payroll. Okay, and you can see that debits and credits equal. So what happens here? Our expenses on payroll, again, this is not for the whole payroll run, this is just for this specific employee. Payroll expenses go up when debited. What else is happening? Well, the presumption is that employee will cash that check immediately, right? So our bank account will be reduced by the net of that check, and therefore it is credited because assets are reduced when credited, and payroll account, bank account, is an asset. What else is happening? Well, there's money that we owe in taxes to government, and that's what will increase our payroll liability. And liabilities increase when credited, right? So that's just for this individual employee. What we'll do is we'll clear out these amounts right here, and let's see, save in previous. We have one more employee. Oh, we have Shizoma. We haven't entered, right? Because we have Lebohang, we have Reyes, but we don't have Chizoma. So let's go ahead and enter Chizoma's information on this one. Let's see, Lebohang, Reyes, and Chizoma. And this, we just have 3 employees for this payroll run, but going forward it will get more interesting. We'll have more. Anyway, let's do it. So what do we have? We have $3,760 as the gross. That matches in this case. Awesome, because it doesn't prorate, so everything lines up. And we have employee taxes that we got to enter, right? So again, federal withholding. Oops. Again, see, it shows up as negative because what it does, it reduces the amount of money that will be essentially given to the employee. But at the same time, it becomes a liability for the employer because it owes that money now to the government. We'll get to that. Alright, so our net check matches. That's good. And now we're gonna go and see the amount of money, see for that specific employer has to pay. Because again, payroll taxes, they have two sides. The employee pays and employer pays, alright? So again, ETT, right here, 376. Social Security, 2312. Medicare, 5452. Federal unemployment, 0304. And then state unemployment, 127.84. Okay, so we've entered everything. Save and next. Save and next. Save and close. Okay, see now here we have all of our taxes reflected, right? And we should be able to essentially now understand debits and credits of what happens after we create paychecks. But let's go back to our overall payroll report and take a look. What do we have here? We have the gross pay and the net pay. All right, gross pay, does that match? Yes, it matches. What about net wages? Does that match? Yes, it matches. Total employee taxes? Well, it's right here, right? 6,907.84, right here. It's included in the gross wages. What about employer taxes right here? 3,045.20. Yep, right here, it matches. So before we click print checks, right, let's take a look at our debits and credits behind this interface. As we always do, it's very important to understand debits and credits, correct? So let's go ahead and take a look. Gross pay, that's payroll expense. So this amount right here, $19,144.62, right? Payroll expense goes up. What else is happening? These taxes, they're withheld. We're not reflecting it. They're included into this gross, right? Net pay, that's the difference. What else? Employer taxes, right? This $3,045.20. That's part, right? And here it is. Payroll cash requirement matches, right? Look at our payroll report, it matches. What else is happening here? Well, the way QuickBooks is set up is that the net pay immediately hits your bank account right here, 10,200, right here. So immediately it will be credited. That's a safe presumption. Employees typically, take the money, or we can assume if it's direct deposited, immediately clears. So that's going to be the net pay. Right here. What else is happening? Well, the employer taxes and the employee taxes are now a liability for the employer until the employer pays the government. So here it is. Let's add those together. Or actually, let's just do them separately. Just for kicks and giggles so that you see how everything adds up. And then 304520. Voila, right? Debits and credits are in balance. They have to be, right? So what will happen after this transaction? Again, our payroll expense, 66,000 account will go up when debited by $22,189.82. What else will happen? Our bank account will be immediately reduced, and then when we reconcile and we clear those checks, by $12,236.79. And then our liability, our payroll tax liability, will go up. 24,000 is a liability account. It will go up by first $6,907.84 because that's the money we took out from the employees' checks, and we now have to pay that to the government. We own that money. It's a liability. And then the employer itself has to pay taxes on the payroll, so that's the $3,045.20. So here it is. Let's print those checks. Print checks on the check stock. Yep. Alright, the checks printed fine. Alright, so here we are. Let's take a look at our checks, how they printed. That's our payroll account right here. Let's take a quick look what we have. All right, the checks printed. The only thing is the numbers didn't quite match to our report, and we can make that adjustment right here. So Chizomo actually got check 1003. Okay. Okay. Yes. Right. Yeah. Reyes got check on it. So we can make those corrections, make sure it aligns with our report. All right, so what do we have? Here they are, right? Our 3 checks. All right, and perfect. All right. So we've printed those checks. They impacted our bank account. What's next? Well, next we got to pay the liabilities, right? Well, no, not quite, right? We got to make sure we have enough money. Even though we printed the checks and we gave it to our employees, it will take a bit of time to clear those checks, so we want to make sure we fund it. So what it is we're going to transfer funds from our general account to our payroll account, right? So we know how to do that. Make transfer funds. Right. Again, make sure the date is correct. And we're going to transfer from general account to payroll account. And amount is just enough to fund our payroll. All right. And put the transaction perfect. So what's happening here? Let's again just do our debits and credits. We're moving money, just like we did at the beginning of this, from our bank account, general bank account, to our payroll account. Payroll account will go up, debited, therefore 22,190 debited, and then our general account will be reduced by that amount. So here it is, debits and credits. All right, this amount right here is a debit to this account and a credit to this account. Save and close. All right. And now we will pay state taxes and federal taxes. And in this case, we call our tax authorities as State Tax Authority and Federal Tax Service. We know the real name, right? In California, this would be your Franchise Tax Board or EDD, Employment Development Department, and here this would be IRS. But again, this is our simulation, so we can use other names. So anyway, employee, right? Again, payroll liabilities, pay payroll liabilities. QuickBooks actually, again, has all these interfaces. You don't have to use them, but if you want consistent reporting at the end of the year, you kind of should. However, we could document it without using payroll liabilities. All right, so again, we got to make sure we select correct dates. And the way we have it in the simulation is that we will pay the liabilities as we go. I mean, depending on the taxpayer's liability to the government, the frequency of deposit changes, but in this case, you know, we just, for simplicity, we're just going to do it this way. So here it is, right? These are all the liabilities that we booked. You recognize them. So let's go ahead and settle our debt with the state tax authority right here. All right. Okay, and now we can go ahead and pay those payroll taxes. That, you know, one, the employer owes, the other portion is that were withheld from the employee's paychecks and now just have to be submitted to the government. All right, so we're going to reduce our bank account and reduce our liabilities. Typically, again, the schedule of tax payments would be driven by the amount of money a taxpayer owes. In our instance, for our simulation purposes, we'll do it just as we run the payroll. So here it is. Let's go ahead, payroll tax and liabilities, pay payroll liabilities. All right, let's make sure we select the correct dates, right? Because again, we're doing it for 21. So it's going to be from January 1st, 21 to the end of our pay cycle, right? And basically it's going to be through 22nd because again, liabilities are assessed when we pay. All right, here it is, right? Here's the money we owe, right? That's our general account. We want to change it to payroll account because that's where we're going to pay it from. Let's go ahead and go right here. First, we have state tax authority. Typically, it would be your EDD in this case for California, but again, it's a simulation, so we just call it state tax authority. Let's make sure we change the date. All right, good. All right, so state tax right here, state tax authority makes it very easy for us. Oops. State tax authorities, I selected what's our total for them selected so far, right? We can see it 229.74, 603.84, 17, right? And 1,500. So we're good, right? We're good. Let's go ahead and pay these, and then we'll pay federal, right? So again, create to be printed right here. We can basically assume that we already paid it, and in this case it's not to be printed, it's something that we will process. Okay, create. All right, so state tax authority. The way it works in QuickBooks is that it forces us to use the check format. We will be stuck with it. Again, there are other ways to do it, but again, you know, it is what it is, right? We're not activating payroll for this simulation, so it's going to be this way, and we can actually again go ahead and mark it such. So again, it's going to be ACH, and we can use the last 4 digits from that transaction for 218. All right, and then have everything else in place. Payment number, amount matches. So what's happening here, right? Let's document this instance before we click it. So we had payroll liabilities that we will settle, that we will pay. So first things first, where is it? It doesn't show, but it shows right here. See, typically you would use expenses, but here's your payroll liabilities. Again, QuickBooks tries to make your user-friendly interface as much as possible, but we still got to know what's behind it. So payroll liabilities, all of these fall under GL payroll liabilities, 24,000, and it will be reduced. Liabilities are reduced when debited, right? So we can go ahead and do this just for demonstration, right? Again, we could set up so that each type of tax has its own liability account, but we don't want to, we don't need to. It's all going into this GL account. Even though there's like 4 line items, they're all hitting 24,000 liability account. What else? All right, debits have to equal credits. Well, we have our payroll account right here, right? And it's going down, and being an asset, payroll account is reduced when credited. So for the same amount, here it is. Right, debits and credits equal to each other. Once we click it, this amount right here is a credit to 10,200 account, right? And these amounts all together right here, they're summed up, is a debit to account 24,000, right? So liabilities go down, and so does the balance in our payroll bank account. So save and close. Yes. All right. What else? Well, we have to pay federal tax liability too. Alright, so let's go back in there. Employees, again, pay payroll liabilities. Again, we gotta make sure we adjust to the right time frame. Here it is, right? So, we don't have anything due to state, but we do have obligations to federal. So again, let's go ahead and click those. All right. So 7,529.08. Yes, it is right here, right here. So let's go ahead and pay it. Again, the check date, we got to make sure that that is correct, right? Because we're doing it retroactively. Here it is. Friday, yep, through 22nd. That's our liability. All right, so we're going to create. So here it is. Again, they're creating a check. We're not going to print it later. We're going to indicate the ACH 4218. 4218. Here it is. Date correct. We're paying it on the same date. Amount. This is the payroll. This is the period which we cover. Okay. Here it is. Everything looks correct. Unemployment, federal withholding, and then these two. 277.60 sum up together to 555.20, and 1,186.96 adds up to 2,373.92. All right. Okay. Cool. So before we do that, again, let's reflect what's happening here. Well, we have quite a few more line items. We have 6 instead of 4, and we can definitely reflect that. And then here it is, right? So we are paying down liabilities. Liabilities are reduced when debited, so here it is. Right? And then we have to pay it, so it will reduce our payroll bank account balance. Oops. Let's see. Oh, okay. My formula didn't look that far before, but now it does. Okay, debits and credits equal. That's what we were going for. And once we click it, it will book it. And again, all of these amounts, right, they're debits to payroll liability. We could have booked it as a lump sum right here. Again, doesn't matter. What this is, right, 7,529.08. That's a credit. That's a credit to our bank account. It will reduce it once we book it. So save and close. We have a check number like that? I guess we do. Well, probably the previous ACH. Let's take a quick look. You have, do you want to record changes? Yes. Keep number. Let's just, oh, okay. So they do. Let's see. Well, we could essentially change it to ACH, and here it could be state, right? And then this one be yes, and this one be federal, right? Because we only have to. All right, so here they are, our payments. F and S. Excellent. All right, here it is. We booked those ACHs again. Even though QuickBooks forces us to use this check format, we could have printed a check and mailed it. But again, typically, what you have is, you know, the payroll tax deposits are done online nowadays. You go online, you get your ACH confirmation, and then you would enter it like this, bypassing again when they're forcing you to use the number. Here it is, right? We booked our first payroll simulation. Isn't that awesome? You've been waiting for it for a long time. We did what you asked. Please subscribe and stay tuned for more of this simulation. We still have January vendor invoices, we still have credit card processing, reconciliation, and then coming up in February, we will be billing clients, right, using time card information that we entered in January. Very exciting simulation coming up. Again, we'll be releasing it during July. Please stay tuned, and thank you.